Good day, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. All our videos for educational purpose only. You're very welcome to follow any of our automated signal as long as you are on a sim. We're not responsible for your trade. We're not your financial advisor. You're very welcome to follow anything, all the signals at your own risk. This is not a trading room. This is an educational room. And right now we are on a short with a YM, Nasdaq, and ES, and we will and a Russell, and we will once this ES cross this target one is an institutional number. You gotta be careful with that, and now we can see the Nasdaq closed that trade. It was a very good profit, and now start going the opposite direction on the Nasdaq. Isn't amazing? The Nasdaq is going really fast, and there we go. And the ES is there's a profit taken on target one. If we have a pullback on the ES, there is a re-entry at 40.9375, and there we go. It's taking a trade, but this trade is not gonna live for long because we have a re-entry short at 40.95, re-entry short, so we're not out of the wood yet with that trade, so it's not a big trade. Oops. Also we have the CL. This one closed. If we look at the Nasdaq, on the Nasdaq we can climb to the 596. Okay, well, a close position on that trade. The market is really fast. Well, the Autotrader closed that trade, but is going to climb to. It's crazy how this trade closed. This is not an ATR, folks. This is not an ATR. The ES keep climbing, and we are going to this entry 494, 495, and it's so crazy because of that one here. It's taking the second trade, and the YM is taking the same trade, and there we go. This is the end of the line for the ES trade, is right there, 4,094. For our traders, if I was you, I will close that trade. This is a re-entry. I want to close that trade. Close that trade, and it is 1,013. And then what we can do, wait 5 more minutes and reload it again and trade it again. On the Nasdaq, we are climbing to. This is it. We're about to close that trade on 595. This is it. There is nothing. This is a re-entry, folks. So there we go, the Nasdaq. And usually on the YM, I do it by looking at the ES. I don't look at the YM chart. So I'll keep my eye on it, and I can overwrite if I want this trade. And there we go. This is the re-entry. I'm gonna close it, save it, closed it. We override the auto trades. We override the auto trades. And now what we are going to do, we're gonna go ahead and reload the ES. If this market decides to go up, the auto trade is gonna take it. But I prefer the auto trade to take a short trade. We call that trade perfectly on the re-entry, and if this ES drop, the auto trade is gonna nail it again, short. And the CL close position start going to the short position. That's fine. I'm happy with it. So that was the entry on the ES. And it was a perfect call. The Nasdaq is doing his job. I don't have to worry about it a little bit now. The Nasdaq is going to the right direction. One thing I wanted to show you when you are auto trading, when you see things like this on the ES, Nasdaq, Dow Jones, CL, any kind of instruments you are using, don't put your head through the wall. No use. You're gonna lose. So if we have an auto trade, any kind of auto trade, it's taking a long trade, you know where is your destination. You can override the auto trade, or you can close position, because when you see so many resistance, you don't want to go through this turbulence. You got to avoid this turbulence by flying over or below. So what I'm saying is, when you see turbulence like this and you see a lot of resistance, you don't need to dive into it. Doesn't matter what auto trade you are using, because maybe somebody will say, well, I'm using a different auto trade. Well, it applies to you too. Or if the other guy's saying I'm using manual trade, or I'm using different kind of auto trade, it applies to everyone. You cannot avoid it. So we knew the limitation on that trade, and we knew that the Nasdaq right now, the limitation is this is a pullback re-entry on that number, so you can keep your eye on it to maximize your profit. And if you notice, if you don't do any action on that, look at this. It goes against you, because it is obvious here it is a re-entry. You have $1,000 into the profit. If you didn't take it off the table, somebody is desperate enough to take it off your table. So you should not be slow when you're looking at the market. You should be focused, not amusing yourself with your personal stuff on the other monitor. So this is an example for a trade had $1,000 profit on your table, we know the Nasdaq is coming here as a re-entry. We say the same thing every day on a YouTube. If you don't pick up the $1,000 fast enough off the table, somebody is going to do that for you, and it's going to leave you with nothing. So sometimes, like today, if you bear with me a little bit here, we don't need to be an expert. We don't need to have a light bulb in our head tell us you are a brilliant trader. But if we notice here from that line and that line here, the bar are very far from each other. I don't want you to look at auto trades. And the farther the bars are away from your lines, the stronger the trend is. If we examine, this is very important when we are auto trading, we need to know where is the end of the line. Don't believe a guy cannot trade a paperback telling you to use a trailing stop and a stop loss. It is okay to use trailing stop and stop loss on your auto trade, but the trailing stop and the stop loss on your auto trade if you make them very tight, you will never see $1,000 in your lifetime. If you make him lose, sometimes you have an auto trade up to $2,000 and you don't see it, and then you close that trade on $300, $400. Auto trading is balance, combination between a human brain and auto trade. It's not a dishwasher machine. So when we are looking at despite we are auto trading or we are taking the trades, as we see from that picture here, it was a very strong trend to the short side. Then it took another dive to the support area. Here is where 95%, when a gentleman auto trading don't see, this is where 95%, whether you are using our auto trade or somebody else's dishwasher machine, this is where the trader does not see the market is not tradable. If we look from 932 until now, what you see here is rubbish. What we are looking here, the market is not trending, is sideways. When the auto trades start losing money, when those appears on your charts, this is where you're diving in a big pile of mud, and God knows you're not going to get out of it. You are on a heavy turbulence here, and there is no exit out. So the thing is, if we look how this line is going and stay below the 40.95, and the market is having a problem breaking this area. Another thing is what we have showed you on the Nasdaq. There is no way a guy with a right brain is gonna go long where there is almost 5 different resistant area here and here on the Nasdaq. So now if we recalculate what's going on the ES, is not looking better. it is looking worse with all those resistance in there. So when we are auto trading, whether we are using NASDAQ, making $1,000, is coming to this area here, that means you better get your money out and run as fast as you can. When you are optimizing, it's not gonna predict today's support and resistance. And when we are doing this trading, I know both of those trades. Right now. On those trades right now, we have crossed $3,000, and within millisecond, they can be wiped up. Why? If we look at this ES, I don't know where it's going to be rejected. Is it from here or here? I'm not a Houdini to find out where it's going sometimes. And with this one here, it's diving in to heavy turbulence where God knows which line is going to be projected from. In those cases, optimization become irrelevant. And on those, both of them right now, you have to have your hands not in your pants. You should have your hands on the mouth, ready to close position at any second. Because this movement right here is temporarily. I don't know how high it is temporarily. And if we don't take action, you're gonna wipe up your profit. 1 minute, you have over $6,000. If we don't, let's say now, because the NASDAQ is closed, and now we have the ES, it's 2,400. Your profit is gonna start sinking, melting like an ice cream right in front of you, and is no longer eatable. So if we notice here, you're dropping your profit on this one here, and this is wrong. The things is, you don't say, I want to make $1,000. You don't say, I want to make $200. You don't say, on these cases, whatever number you are pleased with, preventing you from using your account live again, stop it. So let's say if we make $200, you're happy with it. If you make $2,000, you're happy with it. You make $1,000, you are pleased with it. As long as when you close the auto trade, there is no turning back for today. You're done for today to protect your profit. As we see, as we speak, this is start halting here, and if we look at the ES, start sinking, it's going back to reconfirm everything, whether we like it or not. It has to go back, reconfirm, and it's coming to another volatility, heavy resistance in here. Why in the name of God I need to trade here and lose my profit? Those guys that are selling you an auto trade, they don't have the brain enough to tell you this, because they're not the traders. They don't even know they exist. They are on a different planet. For you as a trader, you should be aware what's going on in the market. He's a car salesman. You are the trader. You need to understand what's going on in the market. It's not his job, it's your job. And if God didn't make him smart enough to teach you about the market, it does not mean we have to be idiotic like him. We need to learn what's going on in the market because this is not a dishwasher machine. So if we notice here, the market starts sinking, we know that. We are aware of it, and we know those profits are temporarily, and if you don't take advantage of it, your performance is going to dive almost to negative. It's not the optimization. You need to sit down on a gambling table for 8 hours gambling. No, I want to find this video again because I was watching it, and uh, they were talking to some people in Las Vegas, but I want to go back and I want to show it to my members at least on Monday. Uh, they say in Las Vegas they make money off people gambling all night. They don't make money off people passing by. Because when you go pass by your table and you use 100, 200, and then you leave, you make money, it's fine. But what they say is they make money out of people sit on the table all night. Folks, this is exactly the same with the trading. You cannot sit on a blackjack all night. You cannot. Soon or later, you're going to start losing. The smartest trader, not the guy with the P&L, the smartest trader, he sees $1,000 on the table. He takes it and he runs with it. This is the brilliant trader, not the guy who made $10,000 in one day. The guy make $10,000 in one day, tomorrow he lose 100. He's unstable. He's a gambler. As we notice here, 1 minute on those auto trade, on the ES and NASDAQ, you cross $6,000. And look at this now. Your whole $6,000 got wiped up. Please be smart. Doesn't matter if it is our auto trade or somebody else auto trade. This is a short trade on the ES. It's the same chart I've been using, the same time frame, the same chart. 1 minute had $1,000, and this is a re-entry point here, and it is not gonna hold. And if we look where the support area, and we know it's not gonna go farther than the 4087. Now it is $2,000. Close it. Done. Because this market is not gonna go any farther. Even if it goes farther, don't regret it. Walk away. That's it. That's how you need to do it. You cannot maximize your profit all the time. You cannot get to the last tick all the time. Even when we are trying, like yesterday, I was trying to fill up some position, not with the ES NASDAQ. It's a different investment. I know I can get it 5 more ticks less. But yesterday I positioned myself knowing I can drag 5 more ticks less on the price. But I wanted to secure my position. I bought a little bit higher than if I waited one more minute because I was pleased with the number I positioned myself to. And of course, it did go those 5 ticks below, and then the market turned around, and then I never seen the number again after I positioned myself. So sometimes we cannot maximize to the last tick, but if we are pleased with it, close it and run. You're done for today. The whole idea is, let's say you start at 9:30, 10:21. How many trades we have had from 10 o'clock to 21? We've been on this webinar for 21 minutes, 22 minutes exactly. How much profit we took? I don't want to talk about it. How many trades we took? It was profitable, and it was pleasant to walk away from the table within 20 minutes. That is the smart trader, not the trader who sit miserably from 9:30 to 4 o'clock. So let's take, and when I'm, for the ones who are trading YM, I don't even look at the chart. When I'm trading the YM, I don't look at the technical chart on the YM. If you are looking for the YM, I look at the ES. I make a decision what I want to do on the YM or on the NASDAQ in that matter, based on the ES. What's happening on the ES right now? It's coming to profit taking at 4073. This is a profit taking. This is an institutional number, and it's coming at that number here, profit taking. And this is it right there. Do we go to the second target? Maybe, but it's too early. It's 10:23. Usually the target 2 is between 11 and 12. I'm gonna keep monitoring the ES position and make my decision on the YM based on the ES, not the YM, because the YM follow the ES. And if we notice here, this is the target institutional number, profit taken on this one. If we, from the technical side, if you looking at here, 32, look this is a support area. This is a support area. It's coming 1 bar, 2 bar, 3 bars, and it's not doing anything. And now, look at this. This is a support area. You don't need to draw a line. The market is telling you it's right there, your limitation on that trade. And look at this. 1 minute you have 2,000. Now you shrink into 1,300. And if there is any pullback, this one is gonna go below the 1,000 profit, and then you kiss your profit goodbye. They say in this movie, money never sleeps, neither do you. You know, money does not hang on a tree. So if you are clever enough and you see there is good potential here, support, I will take this money and run. So now if we measure that chart here, here is your support right there, and it's coming again to your support right there. You see that? And look what happened to this market. Look what happened to this market. Look, right where is my crosser? You see? What is the ES? Right there. Look at this. You see that? It's only wick. It might go one bar down. It might. And it might not. What we have here, 2,300, done. You're done. Finished. You walk away. Let's take another chart. This is the target one profit taking. Where is this ES going? It's going back as a re-entry short at 4087. This is the re-entry short. You can do, if you notice here, you have step 1 and 2 and 3. So you can also, I have one of my traders yesterday. So if you notice here, if you do it manually, you trade and stop or you stop loss, you increase your profit by 100%. Why? Because here is the first level right there. Here is your second, and here is your third. So if the market going farther and you cannot pinpoint where is this market going, maybe you put the trade and stop a couple bars above manually. That is smart. You don't have to use the dummy auto trail and stop, because the dummy auto trail and stop, if we take any chart in here, if we take here this area, the reason I'm saying you never see money in your life if you are using a dummy trail and stop, and the guy you purchased the auto trade from, he don't have a brain enough to guide you. This auto trade took a trade. If you are using a dummy trail and stop, you would have knocked out of that trade right there. If you are using the trail and stop, you would have knocked out of that trade in here. And then if you're taking another trade, you would have been knocked out. You would never see $1,000 in your lifetime when you are using those dummy trail and stops. Let me go back to what we have done with the YM, and let me show you where we have override the auto trade and we force close. Go back to this video here a few minutes ago. Look where we override the auto trade and a close position. Look where is this market at. So what we've done, we maximized to the last take without even looking at technical chart, because it says in here support area. I don't need a brilliant guy to see this market come into this line 1 time, 2 times, 3 times, 4 times. On the 6th time, we closed at the wake. What happened to the market? Nothing. You maximize your profit, you turn your back, you walk away from trading. This is the brilliant trader, not the guy who makes higher PNL. No, this is a wrong message. This is a very wrong message. Because any guy who's been around knows the longer you are exposing your account to the market, the more you are going to be wrecked. You don't do that. You don't do that. This is another example. I'm not going to look at the YM technical chart. I'm going to look at the ES. What is the support? 4080. Are we going to cross that? Where did we say the re-entry again? 4087, didn't we? And now we have $1,000 trade. Here is your support. Should we take the money off the table and run as fast as we can? Or should we stay miserably behind the computer getting a suntan? It's up to you. This is the trader, it's not the auto trade. What we should do in here, the market is stuck in a channel. This is the target one, an institutional number, profit taken. This is the re-entry short. So we can determine this market is stuck in this area. The longer you are on that trade, the higher risk you are in. Remember one thing, when the trade does not go fast to your direction, you are in trouble. As we notice here, if you didn't take anything out, you didn't take action out of it, you can see right now, you lost all your profit. I'm going to close it. The longer the trade, when you're auto trade or you're chart trader, when you have a position, when your order is not moving in the market, let's say you have $200, $300 profit, and you stay in for a longer time on $200-$300 circle, get rid of that trade. I don't care where this trade coming from, because the longer you are on that trade, most likely that trade is gonna be against you. Anytime on any auto trade, whatever auto trade you have in your hands, whether it's ours or somebody else, is irrelevant. When your auto trade take a trade, it's not moving to your direction properly. It's going back and forth. Get rid of that trade. Because this trade is going to make damage on you more than your account. It's going to give you stress. Once you start getting stress, once this market get under your skin, you are a history. You're done. You're finished. The market is like a disease under your skin. Once it start making you panic, it will never leave you alone. It keep banging on your head. The priority is not panicking and get rid of it, and don't even think about it, how much you could have made or you could have lost. Does not exist in a trade. Oh man, I should have stayed a little bit. No. This is your destiny for today to make 200. This is your destiny today to make a banana. You cannot grab everything in this market. You will never be able to grab everything. So don't do that. If this, what it meant to be to make 500, it will be 500. So first, get rid of a headache trade. Don't get stressed under a trade not going to your direction. You need to get rid of it as soon as possible. To stay healthy thinking to regain your thinking again for the next round on the next trade. The psychology behind the trading, it is more important than your rank bar or your chart, because you are the captain on that ship and you need to have a clear head. We cannot get emotionally involved in a trade. It's just a stupid trade. You don't like it, get rid of it. You're not missing anything. You regain your strength and you are ready for a new trade. As we speak here, we got rid of that trade on the YM. What did we miss? Nothing. Because this is right now at this market we have seen. And if we look on the bigger picture on this 1 minute, as we said before, the market was trending level out. Look, it was descending and it's just like an aircraft landing on a runway, and this is like an aircraft landing on a, and look at this. What the market did, went up. The market was not able to break those resistance as we spoke, and then what happened? It collapsed. And now what is doing? What this market is doing is trying to regain strength to break that level, the 40.99. If this market able to break it, is gonna get stuck again on 41.05. So whether you are using rank bar, it doesn't matter where you are using your auto trade from, whether you are a professional trader or a disaster trader, it's not gonna change the fact what's going on in this market. The thing is with the market, folks, sometimes this market is like a buffet table. You can eat all the ticks you want for $9.95. There is plenty ticks to eat. And sometimes in the market is giving you the market limitation how much you can grasp ticks for today. You cannot, again, you cannot challenge that. You're not big enough. You don't have 100 contract. Yes, even 100 contract will not move the market. We are not big enough to move the market. You have to understand your limitation in the from 9:30 to 11 o'clock. Where is your limitation and how much you can grasp takes from the market? It's not what you wish. It's what the market is willing to give you. Well, everybody wished 1,000 tick a day. You're not going to get 1,000 tick every day, you know. So, when we measure our destination for today, when we measure what this market is willing to give us, then we can maximize those trades when we are looking at this trade. If we have an auto trade is taking a trade, any auto trade, we know our limitation to this trade is only here. Whether you are using 1 minute, 2 minutes, 3 minutes, 4 minutes, is irrelevant. Again, here where we took the trade, we override it, and if you have not made any decision, now you are, if we look at this crosser, you're back to zero on your profit. Look at it. Look where is the wick and look where is the entry. Here is the difference between Tom and Jerry. Tom has recognized that trade and closed it, and Jerry is just looking at the kitchen window, looking at the sky for the dollar to drop. Both of them are taking the same trade, using the same auto trade. Does not mean those two traders will have the same performance. It will never be the same performance. Not unless if both of them holding hands, looking at the kitchen window, looking at the sky, not aware what's going on in the market, then they will have the same performance. But if one guy is looking at the market and spot it, and one guy is looking at the kitchen window, the performance, it will be totally different. One guy is a disaster trader, one guy is a profitable trader using the same auto trade. So auto trade is not a dishwasher machine, and auto trade is helping you calculate the best entry, the best price for you, and then you are the guy who has to control the trade to the maximized level without relying on a dishwasher machine to make a living for you. One of the things those people, they don't want to tell you is they tell you to use a trailing stop and a stop loss, so this way they can kick you out of the support as soon as possible, and they don't have to look at your pretty face anymore. The reality is, with the real trading and about trading, when you are using a dummy trailing stop, the dummy trailing stop is working against you, does not work for you. If the guy don't know how to teach his clients how to use the manual trailing stop, does not mean you should believe this guy because he don't have the brain to teach you that. You need to start developing your own for you to take this auto trade and use the manual trade, the manual trailing stop from one level to another in order for you to maximize your profit. As we see, let's take another one. At any condition, at any market, this one we override the CL. And what happened when we override the CL? Nothing. Let's take one more. CL. Where is the CL? What is the CL? The CL, it is on 4 support area, right there. Is this CL able to break this area here? You can see tons of brilliant traders want to teach fibs. First, they don't know each guy draw the fib line from top to bottom and all this differently. On the same chart, each one of them, they draw their lines differently. And every guy tell the other one, my theory is better than yours. Anyway, it doesn't matter. But all of them have one thing in common. They don't know what to do with the market when the market hit the line. When the market hit the support and the resistance, they don't have any more answer because they are limited traders. They sound smart, professional, but they are limited because the problem is any guy can see support resistance. The problem here, we need to check up the pressure, like you check up the pressure on your tire, how strong that support is and how much can hold. Because your profit, maximize profit, is not by the stupid line called fib support resistance. Your profit is based on if this line gonna hold or is going this market cut it like a knife. This is where is your profit, not for a moron telling me where is the fib line is. So by measuring this chart here, there is another calculation to understand. From 1 to 30 minutes, the high time frame, where is the institutional target, where all those details point in this market, I can read the pressure in the market. Once I know how to read the pressure in the market, I can predict if this line gonna hold or if it's not. On top of that, we are not using repaint reversal. Those reversal here are not repaint. Those reversal is giving the trader warning. The market is on the trend exhaustion, which it can flip against you any second. Another thing is there is something here called also trend exhaustion and is about to flip to the opposite direction with a higher time frame. On the second here, we have many indicators, combine all of them and given us if this trend is down or up. Plus we have the bears and the bulls in there. So by monitoring this, we can recalculate if this trade on the CL, should we take it 2400 and run away? Or should we stay on that trade and we can maybe put some kind of somewhere in here a buy stop loss manually? Not what you've been told by a guy cannot trade a paperback. You need to use a dummy trailing stop. A dummy trailing stop is a good news for your broker. A dummy trailing stop is a good news for the guy who want to kick you out of this market permanently. A trailing stop for people and a professional, they are tourists in the trading and they will be gone within 2 months telling how everybody mistreated them because they don't have the brain to learn. They don't deserve to trade. Any guy don't want to learn, he don't deserve to earn money in the market, period. So on this market here, despite all those technique, despite all those indication, if we look 1 bar, 2 bar, 3 bars, 5 bars, 6 bars, 7 bar, 8 bars, it's telling you from 1043 and now it's 1049. Houston, we have a problem. We cannot break that wall. And the guy is auto trading a CL and he have $2,400 in his pocket on the table. What you're waiting for? What you are waiting for? For this market to go back? What you are waiting for to close, push the button, walk away like a man. Don't sit and whine about it. Walk away like a man. What you are waiting on? To make another $200? To make another $1,000? Maybe it's gonna happen. Maybe it will not. What you're waiting on? If we look at this, forget all those indicators. I want to look at the white chart. Where is those level? Right there. Okay? I'm going to take my hands off this mouth. And where is this market? It's right there. So what you are waiting on, if this market not able to break here, why you want it to stay? Even if this market gonna go 1 bar or 2 bar further down, what you are waiting? Because this bar can go turn around very fast on you. So let's go back in here. After many try, this bar went down a little bit. It's fine. What is in here? Double support. What is in here? Support. Why you want to mess with something is become irrelevant. It might gonna give you $100 more or $200 more. Are you happy with the number? Close this trade, walk away. There is nothing left on the CL. It's finished. It can go one bar more. It can go 2 bars down. But it is finished. It's the end of the line. Now what will happen to the CL will go back retesting the resistance. And it depends what happened in here. We can measure what's going on. And there is nothing left. This is the maximize you're going to get out of it. If you wanted to really hammer this one, where is it used to be support, now become a resistance. Where is the resistance? It's 114.99. If you want to take it, where is here? 114.99 is right there. Or make it 115. So you can put manually above the resistance line, which is going to come back, absolutely. But here it is 114.97, and now the support become a resistance, but we have not confirmed yet. Why? Because this market has to go back to retouch it one more time to see if this one gonna hold or not. So it has not really been confirmed yet. And we can hide the trailing stop above the resistance line, and we let it go. It's finished. So anything below that number, we are taking a risk, but we secure the profit. This is another solution you can do it. When the market breaks a support area, and you are done for today, or a resistance area, you can take and measure the market. You can put it on your auto trade, and you let it be. Because everything below that number is an extra. And as we see here, the CL is going back to resistance to confirm. And it might confirm, it might keep going. If we look at this market right there, the higher time frame has refusing to die, and it's still the 30 minutes, 15 minutes, 10 minutes is into the green. So there is a possibility for this ES to break or not. I don't know. So in those cases, if you notice right now, the CL going back to retest the resistance line, and we already secured the profit right above the resistance line. This way you can be aggressive. This way you have already set your profit for today, and whatever extra is gonna go below that line is become just an extra. But you already set your target. You will not be able to auto trade with a trailing stop, and when you're auto trade taking a trade, you have no clue where this market going. You are not allowed to do that. Anyone is telling you this is rubbish, well, look at your account again and tell me how rubbish it is. Your account. So don't tell me how smart you are. Just look at your account and you say to yourself what I'm doing wrong. And I'm telling you what you are doing wrong. You are treating the auto trade like a dishwasher machine, and you are using automatic trailing stop. Of course, we have automatic trailing stop on every auto trade we have. But this is not the whole idea here. If you are looking for $3,000 and $4,000 trade, you're not going to get it with a trailing stop. Even if you put your trailing stop 50 ticks, you're still going to get banked on it. No matter where you put your trailing stop, the market will make sure you're out. Look, take any chart, and this is a 1 minute chart. If we look at this chart, you can see you would have been stopped out 2-3 times on that trade. You would have stopped out 2-3 times on that trade. This trade right now is 3,560. Look what happened. Welcome to trading. How much you had a second ago? How much you had a second ago? And how much you have right now? News or no news, inventory, CL, doesn't matter, it's irrelevant. What happened to your 3,000? Banana, gone. Kiss it goodbye. You cannot trust the market. The market always does what we are not expecting. All those guys on every single YouTube before New Year Eve saying the Bitcoin is going to hit to 100,000. I was screaming my head off. I keep saying the Bitcoin is not going to go to 100,000. Everybody borrowed money, put mortgage on his house, bought Bitcoin a couple months before because all the prediction on the Bitcoin, every single guy on the YouTube singing the same song. Bitcoin is going to 100,000. Guess what? It did not. What happened? Why? The market always surprises us. You cannot predict the market. You cannot. You think you got the market, all of a sudden the market goes back the opposite direction and surprise you. Never trust the market movement. Never. So, if you tell me, if you ask me where is the Bitcoin going tomorrow, I cannot tell you where it's going tomorrow, but I can tell you where it's going today. Let's say if I wanted to let me connect it. I don't know what happened at night. I don't know what happened tomorrow. If I need to predict who would have thought the oil prices is going to be like now and the food prices 6 months ago? Who would have thought that? No one. Because you're gonna have something happen from now till New Year Eve, can ignite the Bitcoin to 100, 200, or can drop it to 10,000, 5,000. Nobody can predict the future, but as a trader, you can predict today. So now if we notice here, 1 minute you were 4,000, and now where you are? Where is your 4,000? Let's say 3,000. Where is your 3,000? What happened to your money? What happened to your profit? Is it the auto trade? Really? Or is it you? Here's the question. This auto trade delivered $4,000 for you. Is it you or the auto trade did not take it? You want to use a trailing stop? You would have got out a long time ago, and you will be sitting all day long on $200 straight. For if we want to look at the Bitcoin as an example, I don't know what will happen tomorrow. But I know what's going on today. If we look at the 1 hour chart on the Bitcoin, the system has given us a warning 2 times. It's going to be short when it was on 32 level without logging into those guys and hear them bubbling about trading all day long. Here it is, 2 times is telling us short, take it short. And now there is every guy out there is trying to analyze the market. Where is this bit going? is a middle of turbulence. It is middle of a turbulence, and that is if this guy survived that line, it might survive this one, it might not survive that one. When you are looking at this chart, that can wipe up every single person on a YouTube trying to tell me, should I sell Bitcoin or should I buy Bitcoin? This wipe up all their mouths. This is where the Bitcoin right now and tradable. If you are trading for 1 year, 2 years, 3 years, it's fine. But when we're talking about those guys that are over-merging themselves, they are actually in the Las Vegas trade here. And as we see, there is a long way to go home. As a trader, I will not buy from here. I will buy here. Even it's more expensive. But I will buy, like yesterday when we position ourselves on a different matter, not Bitcoin. I paid 5 ticks more, but I got in where I wanted to get into. So if I wanted to trade the Bitcoin, I will trade it above the 3,500, but I will not trade it at 30. I'm willing to pay $500 more than to trade it here. If we want to look at the 15 minutes, so we can magnify ourselves what's going on, is indicating the same thing. You have to be patient to position yourself, not from here, once we cross here. But then you're going to have some small details telling you to start going long. So you start filling up a little bit at the time. But when the market is right there, you're not going to position yourself. I don't care what this guy is saying on YouTube. You're not going to position yourself on a Bitcoin on those levels here. No. Probably we will go ahead and position ourselves if we wanted to buy, let's say, Bitcoin, somewhere at the 27 level. And if it did, either on the 27 or above the 35, but not from here. Why? Because this is an area is not tradable. It's not what you want or when you wanted to trade. It's what this market is telling you you're able to trade. So there is 2 options on that chart. If you are using 60 minutes, I don't want to go through details, but if you wanted to, let's say, trade, you have 2 options. You buy here or you buy here. Here is not tradable. The same thing apply for the ES. There is a certain area you can buy or your Autotrade can buy, and a certain area you need to stop. As an example right now, I will never allow an Autotrade to take long here. I will never allow that. This is a high risk. If you allow your Autotrade to take trades in here, if somebody cute telling me, well, my Autotrade is making money here, also our Autotrade is making money here. But this is not the question here. On that trade here, that Autotrade, you gotta keep your hands on your mouth and ready to override that trade immediately, close position, because we don't know which number this ES is going to hold. We have money. Should I let the auto trade take a new trade in here? No. With all the respect to all the optimization you have done on the weekend, there is no way I will allow any auto trade to take long trade in here. It's a nail in the coffin. Because when you are taking a trade in there, the first of all has to cross this line. Even if he's able to cross this line, you have a double resistance here. It's going to get stuck at 41.14. So even if your auto trade survive this resistance line, it's not going to be able to survive the next resistance line. So to generate a new trade is no. To allow your auto trade to take a long trade in this area, it's not going to make you money. If you are in a trade, you secure your profit immediately without this dummy trailing stop. Or either you push the panic button, you close position, or what you do, you'll give it 1 bar in this position and you put a stop loss right there, so you can, right there, right below that bar. Because right now, on this trade here, even if he's going to survive that trade, he's going to get stuck in here. Let's measure the market. The market is not giving us a really full throttle to the long side. Half of the higher time frame is in red. So this is not promising the market is gonna break those double resistance and it's gonna make money. So you're not allowed to let the new trade on an auto trade to take a new trade. And if you are in a trade, you know what is coming to you is, if we are surviving this area here, we're gonna get stuck in here, and your left hand ready on the throttle right there to close position at any second, any time, monitoring this chart, and you are ready to close position to the maximize and walk away. It doesn't matter if this ES is gonna climb from 41.15 to the 41.26. We set there is problem at 41.16, and most likely this market not able to break it. You have a big pot of money in here. You cash in and you run. Don't worry about this bar you didn't profit it from, because immediately this market can turn around on you. Immediately your 2,000 become 200. So if we notice here, we are coming to this area and we can see how the ES stopped at the 41.16, exactly what we are thinking about. There is a good potential for this ES to go up, or there is a good potential for this ES to drop. Again, the secret number is, if we are pleased with it, close it. Close it. Two things we can do. If you secure your profit right there, you can override the auto trade and secure some of your profit. If we secure your profit right below that bar and this market is there, you can do that. You can walk away with 1,500, or you can close this button right there and walk with 3,500 or 3,200 or 3,800. And call it off. If we notice here, the first bar, the second bar, still on that line. The buyers over the sellers, and there is some weakness on a higher time frame. This is the yellow line, 41.19, and you can see the ES wanted to cross the 41.19. That's very fine. That's very fine. How much you have here? We can move it one bar, and the most advisable is to close position. You're finished. Folks, that's all what we have for you today. Thank you very much. God bless you all, and we'll see you tomorrow. Bye for now.